Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James with TheChartGuys. It's Wednesday, March 22nd. Going to do my nightly video on gold. So gold here on the daily has had 1, 2, 3, 4, 5, 6 candlesticks in a row green. And if you go back 2 years on the chart, I could only find 2 instances where we had more than 6 green candles in a row on the daily. And in those 2 instances, we had 7, and then we had a couple red days of consolidation. So I'm looking for some short-term consolidation here. And if you look at the 4-hour chart, you can see that the RSI is a little bit overbought here. And so it's already consolidating some here. We have a potential bearish reversal candle here currently being confirmed by this 4-hour candle at the open at 6 p.m. Eastern Standard Time. So if you go back, you can see all the times we've been at this overbought territory and the consolidation that comes. I'm not looking for an all-out dump, just looking for some potential short-term consolidation. You can see the RSI and these consolidation, a little bit of consolidation sideways, consolidation, and so forth. So potentially looking for a red day. Again, not a full-out dump, but just some healthy consolidation at this point. And if you look at the US dollar Japanese yen on the daily, it looks like we're getting a oversold bounce here as well. But if you look at the daily, we've had now 1, 2, 3, 4, 5, 6, 7 red candles in a row on the daily. And if I go back a few years on the US dollar Japanese yen, there have only been 2 instances that I find in the 2 to 5 year period where we've had more than 7 red candles in a row on the daily. And the last time we had 7 red candles in a row was 1, 2, 3, 4, 5, 6, 7, and then we had a green day before and consolidated for more downside here. So watch for potential consolidation. Again, be mindful that Janet Yellen's speaking tomorrow. And if you look at gold and the level it's at currently, let's just say let's just use the candle that closed at 5 p.m. today. You can see it's the $50 area that we're at on gold. And the last time we were in that range, that price range was on 223. It was closed at 1250.70. That was February 23rd. And if you go to GDX, and you see the price it was at on February 23rd, you can see that it was much higher than it is now. And that could be to the pullback in the markets. As you know, gold miners are still equities that are traded, equity companies that are traded on the stock exchange. So that could be weighing them back. But something to be mindful of is because of this weakness in gold, because of this weakness in miners, a pullback in gold, you could see a bigger correction in miners than in gold. Or if gold were to do something crazy tomorrow, you could see a bigger move in miners, depending on what Janet Yellen says. So keep that in mind. And individual charts, GDX and GDXJ look a little bit different. And you'll show you what I mean. So GDX has been a little bit stronger technically than GDXJ in the sense that it's been setting higher highs. So we had this high before the pullback on this last bounce we had, and we set a higher high on the daily and then another higher high today, and we've been setting higher lows as well. So what to watch for with any gold consolidation is potentially to fill this gap here. We got to 23.03 and the gap fills at 23. So we didn't fill it by 3 pennies, 3 cents. So watch this high and low of this daily candle that we formed today. The high was 23.56 and the low is 23.13. A break of 23.13, likely we consolidate a little bit further, maybe for the gap fill. If we lose the low of this candle here, 22.58, that could be that's a red flag for me, because we're likely going to test the low of this candle, 22.51, which lines up with a back test of the 20 MA, this purple line here. And if we lose that and break below that, that's a red flag, because we're setting a lower low on the daily, changing this trend of keeping a higher low from the previous low on the daily on this uptrend. So keep that in mind on the daily. And on GDXJ, it looks a little bit different, because where GDX has set higher highs on the daily, we have been setting lower highs. So we had this high here of this bounce attempt, right, for the pullback, and you can see we're setting lower highs on the daily. So let me go back to the GDX chart, because the moving average level of resistance is the same for both. So you could see that currently we're rejecting at the 50 MA here on GDX. So that's a clear level. I stated yesterday in my video that GDX needed to close above on the daily to move higher, and it's yet to do that. And then in GDXJ, you can see that same level of resistance. And you can see this long upper wick of profit taking from that resistance currently. So for tomorrow on GDXJ, you want to look at the low of this candle of 36.93 and the high of 37.95. But more importantly, you want a bull break of the high of this candle, of this long upper wick of profit taking, which is at 38.22. If we break below that, watch for a break. If we break below the low of this candle today of 36.93, look for consolidation. Red flag would be if we obviously break below 35.68, the low of this candle. We'd break that trend of setting high and higher low, lower high, this equilibrium pattern that we're in that's tightening here. So be mindful of that. And if we test the low of this candle here at 36.09, it also lines up with the back test of the 20 MA. And with all these moving averages here, if we lose that and close below them on the daily, that's looking pretty bearish. And again, big red flag for this bounce attempt here if we break below the low of this candle of 35.68. And if you go to JDST, if you are thinking that some short-term consolidation is coming, you can see the same pattern in JDST. We have this low, we have a high, we have a higher low. And so what you want to look for is a break of the high of this candle on any gold consolidation, currently at 13.88. And you can see it's rejecting the daily 4 EMA here on this pullback here. So that's a clear level to break, would be the high of this candle tomorrow of 13.88, close above the 4 EMA. And then a nice bull break would be a break above the 14.95. Give more confidence to the bulls would be, for JDST, would be break 15.38, the high of this candle, because that's the high of this bounce attempt so far from the lows. And red flag if we break below 12.49 tomorrow, and big red flag if we break below 12.32, potentially signaling even more downside here on the rejection of the 4 EMA daily on this back test and further downside. And if you want to get in early on bear miners, JDST, the reason why I'm using JDST as opposed to Dust for the bear miner play is because, again, technically GDX has been stronger than JNUG, and because JDST is the inverse of JNUG, I'm looking at JDST for a potential bear miner play. So if you look at the 4-hour chart on JDST, you can see once we lost this 20 MA here on this candle, we back tested and rejected, another back test, rejection, 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 another back test, rejection. And so what do you want to wait for is this TCG bull cross. Again, TCG bull cross is when the 4 EMA, my green line, crosses above the 8 EMA, the red line. And you also want to close above the 20 MA, because we got this TCG bull cross here, but clearly we weren't able to get above the 20 MA and rejected here and further downside. So in the short term, play gold consolidation, if it should happen tomorrow, is to make sure that we close above this 20 MA, which it's trying to do now, and we get this TCG bull cross. And you really want these MAs here to move above the 20 MA here as well, and you can get some nice upside. On the flip side, GDXJ, you can see that it's currently getting a TCG bear cross and about to lose this 20 MA if it does not close above it at the close. And why I like the 4 hour sometimes for a quicker entry than the daily TCG bull crosses is this play set up for us in the Chart Guys chat room. And I was setting this play up live for the members, was when we got this TCG bull cross here, the 4 MA over the 80 MA, and then GDXJ had closed above the 20 MA, but we hadn't gotten this bull cross yet. And once we got this bull cross here, and then these 4 and 80 MAs moved above the 20 MA, you could see the nice upside that it had for a 2-day play here on the bounce. So that's something to watch for for an early entry on bear miners if you expect some short-term gold consolidation. And again, it's just a short-term play for now until the daily on JDST signals a TCG bull cross, which is quite a bit away. And for that to happen, you would need, let me go to the daily on JDST. You would need a TCG bull cross. You would need a minimum of the JDST price to close above the 80 MA here. So that's further away than the 4 hour chart setting up right now. So we'll just play the 4 hour chart right now if you're expecting gold consolidation. And in the bigger picture for gold on the weekly, look at the gold weekly chart. You could see a potential for a inverse head and shoulders. And so we have this left inverse shoulder, the head, and then the right inverse shoulder. And sorry, not the daily. We want to go to the weekly for the inverse head and shoulders. So we have this head and shoulder playing out. We have this left shoulder, head, right shoulder. And on this bounce attempt, you can see where it's getting rejected on the weekly charts. So for this to play out bullish, you want to break above the high of this. For longer term chart technicals is to break above the high of this of 1264.90 and then to close above the 50 MA here, as it's been rejected twice now on these back tests of the resistance. So again, Janet Yellen is speaking tomorrow. It could be a volatile day, so make sure you have stop losses in place. You know the levels to watch on the miners. So have a good night, and I'll see you tomorrow.